his calls. So I want to start off with Aussie Kiwi. I worked the short side last week. We've held the 50% retracement, really a shallow retracement in here compared to this big move. Was this it? It could have been. And the fact that it didn't go 61.8 speaks to its relative strength, that we worked off this overbought condition more like moving sideways and giving up a lot of price. For the week, let's look at it. Did not close. Friday's not done, but you need closes over 106.03. So I don't know if that's going to happen. I'm going to remain patient and not go with this and see if we could get one more shot down on that. Of course, the big feature today is all that glitters. Goldfinger, he's the man with the golden touch. All he loves is gold. Give me my gold. I'm King Midas. Anyway, it looks great. Headed for this weekly breakout here. Steve talked about it yesterday. Looks like a layup here, which the Golden State Warriors could have used more of, and they should have been played better defense and not turn the ball over as much. But I don't think gold's going to turn the ball over. It's going to break out. You know, so many people are focused on this breakout. I'm not saying it's not going to work, but something to keep an eye on. That, okay, it breaks out. But if you see it after the breakout back under 1375, say we managed to rally to 1400 for just a short period of time, maybe intraday, whatever, and we're back under 1375, look out, okay? Because this is going to shake out every last short, and it's going to bring in lots of new longs. So this is going to be the key area. Silver chugging along with it. Top of the wedge is up here at 1620. Is it going to fulfill it? It ends up having a decent week after they tried to nail it on that one day. Decent week. Still above the 2-week off number. Maybe we're in for some acceleration. What's interesting about all of this is the metals are doing it in the face of a steady dollar again. So we've seen this movie before. And last week, going home, I thought we were going to have some decent follow through. And here we are bouncing. Is this level going to be enough for us to propel to new highs up here? Maybe. So I went home last Friday, and I'm sure I'm not the only one saying, here we were, nice breakout for, you know, quite a long-term formation, right? But it ended up being contained by the 50-week right here. And now, I don't know, I have a hard time wanting to be short here, but it doesn't look good. Blake and I talked about it yesterday, about that it's starting to take too much time if it was a major breakout for it to accelerate. I think Blake said 1250 was his line in the sand. Nice call, Blake. Here we are, we're holding 1250 and trying to turn. So we'll see if that happens. And the yen, actually, although lower, I think that it has some decent relative strength, and that's because look how far away it is from the low. I mean, you know, 40 pips, which could happen in a heartbeat, but look at the 10-year. 10-year almost made a new low. Trying to bounce here, but look at this, almost a new low. So the 10-year came much closer to a new low than the yen did, because I still think we could go to 110.60. On a weekly basis, I would say yields, see, yeah, it's done nothing right. I mean, there's no reason to buy it here on the weekly. Next week may be a different story. I'm thinking it's next week where I may try this, because it's not going to take as much for a 2-week reversal. And it had a chance. A 2-week reversal would have taken place at 213, and interweek we got to 217.9, almost 218, but was rejected by this wedge line. So we need to get back inside this wedge for to call a bottom and a trough in yields and a potential buying opportunity in US dollar yen. And just a couple of things I talked about earlier in the week was euro pound, worked from up here. Now it's pretty neutral. I think we have a chance to see a new high here. I would take a stab up at new highs around 89.5. If the RSI is not confirming and we haven't made a new high, getting a little bit of a reversal here. So that's it for the week. I really think besides the euro pound, I think that all of us here in FACE, talking about the team, did a very good job of recognizing the high in the S&P on Tuesday. So the question is, was yesterday a failing rally? I think yes. So, if we have a quality, this was close to a 40 handle break. 40 handle break's going to take it down to this confluence at 2860. And great job by the whole crew. Andre had a number at 2910, or I think, or 08, and I had 10, and it went to 1110. So we'll try and clean it up. We were off a couple handles, but that was a pretty good call, and we'll see. I mean, on a weekly basis, I know I have a lot of fibs. We're still higher on the week. Next week looks important because, my 2-week off number, simple, but, I use it because it gives me some tells. It's still on a buy because we didn't take out the close from 2 weeks ago. But next week, it's going to be much easier to accomplish because a week from today, if we're under 28.74, you're going to have a 2-week reversal. So I think that 29.10, 78.6 level is going to be worth more than just this initial break. Maybe we pull back to here. Here's your fibs on this decline. We went 78.6, so I haven't done the fibs on this advance. It wouldn't be surprised to see some type of pullback and deeper than we've had so far off that 29.10 level. Blake, I know you're fully recovered now, and it's great that the weekend is here. I know I need it. We were talking about the euro yesterday, about maybe having a jaded eye because it was taking so long for any acceleration to take place out of that wedge. How do things look to you today, my friend?
Well, good morning,
Good morning,
Dale.
buddy.
I actually picked up the euro again today at 112.54. If you read the analysis, let me just take you over to ForexAnalytix from last night, and let me take you over to the basic technical analysis and the end of day. The euro dollar is on the way to test the 112.50 level, which will be key for the bulls to hold. The PIP, the pattern in play, which happened to be mine, may be invalidated, basic technical analysis. However, the bulls may need to loosen up to allow for a test before another rally attempt. And basically, what I was saying is, when I initially entered a pattern in play coming out of the you have to go back to last week, coming out of the descending wedge, the trend line retest was right here at 112.70, and so I put the invalidation level at 112.70. But it's a descending trend line, as you can see, and so as the week wore on, the descending trend line actually came down to 112.50. Now, I'm not a person who adjusts my stops again. If something's going against me, I'm going to let my stops stay. I'm not going to adjust them against me. You know what I mean?
Yeah. You're not
To,
gonna, yeah, you're not gonna say, oh well, I'm almost about to get stopped out. I better move it.
yeah, exactly. Because
Yeah.
the original idea has to stick. Because if I don't stand fast by that rule, and this is a basic trading rule, if I don't stand by that rule, then what happens is I develop bad habits
Yeah.
in the future by like getting into trades, putting in a stop, and going well, and then talking myself into it.
CIC, call those orders, those stops.
What's that?
Cancel if close. CIC.
Cancel if close. Yeah, it's like yeah, exactly. That's ridiculous. So, but I did get stopped out overnight, and then I re-entered. I re-entered it. I had a bid at 52, and it didn't get tripped, even though we went as low as 151 and some change. I actually enacted it at 54. I got long, and then here we are at 64. I could have saved myself a couple pips if I would just let it get hit. But regardless, I know the risk right now, and it's very defined, which is great. As a trader, it's you can define it. It's like, hey, if it gets below these lows here, we drop below like 40, it's not going to work out. I mean, but it's very defined from where it's currently at. So I put in a position, or I put in a long, and I got long, and the fact of the matter is we got retail sales coming up here in a few minutes, and retail sales is going to make or break the euro. The market is expecting a stronger number, and reading like one of the guys from my office who is at least 100 times smarter than I am, and he's one of those guys that he's worked at a bank for decade and a half, and breaks down macro data like it's nobody's business, and whips out a bunch of charts. And when you look at like the Bloomberg system, like if I can just I guess I could probably share with you guys like another screen. I've got like 6 screens of Bloomberg, and you look at like all my charts and blah 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 and all the news I've got streaming. And he's one of those people that uses Bloomberg to its fullest extent, where I probably scrape the surface and use about 1% of what Bloomberg has available. He just burns through macro data, historical data, and just really breaks it all down. And he looked at the retail sales, and he's like, I think that we're going to have stronger retail sales this month, but next month it's going to be it's going to start. You're going to start to see a weakening of retail sales based on he was looking at all sorts of things from sales of farming equipment to this is the kind of analysis this guy does. There's a guy in the office in Greenwich, Connecticut. Anyway, like I said, it's extremely intelligent individual, and he sent us an internal report of what his findings were, and he thinks that today's going to be a strong number, but next month is going to be a little weaker. The point I'm trying to make is the market is, I think, probably expecting, and actually, if you look at the retail sales that we have coming up, the market is looking for 0.5% core retail sales versus 0.1% reading last month. And minus or including everything else, the retail sales headline number is supposed to be a bit stronger as well. Now, are we going to match consensus estimates? I don't know, but if we come in a little light, that could be the catalyst that drives that euro back above 112.80. And if we close the week above 112.80, and especially if we close back above 113, I will hang on to my euro long. I'm not gonna sit around and holding a long at the end of the week and only being up 10 or 15 pips. I really would like to see a positive reaction from here by the end of the day. So, but we'll see. I mean, like I said, the market's expecting a pretty stout number, and if the number comes in weak enough and it pushes the euro back towards 113, I might hang on to that long. But I had I have a very good price as of right at this moment in time. That doesn't mean that that's going to be the case by the end of the session. We get a super strong number, and the euro is going to be below 112.40, and it's going to end up being a false breakout. This is going to end up being a false breakout for the week. You know, this will be a false breakout, and I don't want to stick around on the long side if that's the case. So my stops are in place. Like I said, it's manageable risk from where we currently sit. Well, one of the other things that's obviously, I tweeted about it this morning is on everybody's radar right now. Well, it better be, and if it's not on your radar, you're living underneath a rock. Is this huge move in gold? Gold now. Earlier this week, back right around here when we were consolidating, this is like earlier this week, there was an article from I think it was Stanley Druckenmiller, saying how gold is his play of the next 2 years on the long side. I think it was a write up on him. Anyway, he made the case for why gold's going to go higher, and gold looks on the cusp of a massive breakout. I mean, any which way you slice it, you can look at this trend line, you can look at that trend line, you can look at that trend line. I don't care how you look at it. It's just gold's on the cusp of really breaking out here. And does that mean gold's going back to 1800? I possibly could. I mean, this is a pretty big. I mean, this is massive, right? This is massive if we do break out. And the question is, if we do break out, what happens to the dollar? My assumption is the dollar is going to get smoked. Now, is it going to be mostly dollar yen related and maybe not so much euro related? Possible. But I wouldn't want to find out. If gold really starts breaking out and you happen to be long dollars and gold is breaking out, you better be careful. I hope I'm very clear on this analysis today. If gold breaks out and we start breaking above like 1370 or like Dale said 1400, man, if you're long the dollar and gold is breaking higher, you've got to be careful because typically, and let me move this. I have to move this out of the way. Okay. Typically, the dollar and gold have a very inverse relationship. They're pretty much a mirror image of one another. Okay. So if gold breaks out, the dollar, let me grab a pen here. If gold breaks out.
I just have one comment. We're getting a question from, I believe it's Karaki Trader. When is Grega coming back for market analysis? Yeah, you know what, Karaki, I would feel a little bit void of my intelligence gathering without Grega's stuff every day, which you can get as a subscriber. So you subscribe to us or to his website and you'll know every day instead of waiting for him to come and do it for free on Facebook.
Yeah, and he usually stops by once a week, but we get his Elliott wave analysis every day. Every end of beginning of European session, we get updates of how he feels about all the different asset classes that we cover. And so yes, that and is he going to be here today? Probably not. It's Friday afternoon in Europe and he's got kids, so chances are he's not going to be here today. He's usually and he's usually here once a week. He'll pop in and say hello.
Is that enough to be able to follow Grega effectively? Just by coincidence, you're here in face and Grega happens to be here.
Yeah, since it's random, probably not. So
that's what I mean.
Yeah, best bet is to be part of the ForexAnalytix community, in my opinion.
Yeah, pay a little bit of money. I mean, don't you think Grega's work and how hard he works deserves to be compensated for it? And this is how people compensate analysts, great analysts for great ideas, is with a little bit of money, like 12 pips a month, worth it.
There you go. Exactly. All right. But going back to thank you, Dale. Going back to gold, you got to be really careful if gold breaks out. Just how the dollar reacts is typically negative. And like I said, will it be mostly dollar yen? It's possible. If I was short the euro and gold was breaking out, I don't know if I'd want to be doing that. It depends what the context is too. I mean, if stocks are selling off, maybe you do get gold and the dollar going up at the same time, at least for a short period of time, via some risk aversion. But for the most part, generally speaking, if gold is breaking out, you don't want to be long the dollar. So and it's not just gold, guys. It's also silver. If you look at silver, silver is about ready to test the 618, and frankly, if we break above this 115.11 level, there's a good chance we're racing again towards 116, and then trading up to $16, excuse me, and then possibly even beyond that. I would assume that if gold starts breaking out, silver is going to do one of these. It's going to look more of like a Gartley or butterfly, something to that effect. It'll look something like that. And it's hard to tell.
That's a big trade.
Yeah, it is, especially from current levels on what look like on a percentage basis. It could be a real big move. So
yeah, Blake, on a 1 hour chart, people feel like they're late, but when you give them perspective on a daily, they're not late. It may have just started.
Right, and you got to imagine where these closes are too. I mean, if we close in a big way up, like let's say gold closes at 1270, 1370. My assumption is we're going to be trading up at 1400 by the beginning of the week, and if silver closes at 1515, we're probably going to be in next week we'll probably be trading at like 15 30 1540, and that would just be my assumption, just guesstimating if we do get these breakouts. And then what does that do to the euro? Well, the euro might be trading back at 113.50, back revisiting these recent highs. The cable might be up at 127.50 again, testing that resistance. The Aussie, believe it or not, I mean, the Aussie's come down, but I know I pointed this out yesterday. The Aussie's actually acting pretty well, despite all the big theme of the U.S. China trade war. I mean, my question is, why isn't the Aussie a lot lower? And a lot of analysts are looking for a much lower Aussie dollar exchange rate, and frankly, we're just not where I think we should be, actually, I guess that's the right statement. I'm surprised we're not lower. I'm surprised we're not at 66 cents right now. And given the fact that we're not at 66 cents and we're near 70 cents, if gold breaks out, a lot of times these precious metals take, the Kiwi and the Aussie with it. So, just some food for thought as we go into today's data. Again, the market is looking for a strong number, and if it comes in just a little weak, maybe that's enough to drive the dollar lower and get gold breaking out. I mean, look at silver. Silver's at new highs of the session as we've been speaking today. I know all of you just ran out and bought silver, which is great. Just be careful because we're right up against resistance. You guys have been buying it since we've been talking about it. So, but anyway, I want to bring on my colleague Steven Stelios as we go into the end of the week. Good morning, guys. How are you doing?
Good morning. I'm very happy because I'm going on holidays tomorrow.
You're going on holiday, and I know you're long precious metals. So
yes.
The two very great things going into Friday. Stelios, how do you feel about this move in gold and move in silver?
Well, I like it. I said this morning actually in the chat room that when gold was at 1357, I said, look, this, if anybody wants to play gold on the short side, this is probably the place to do it, exactly like you said. And with a very, very good risk reward and a short, pretty tight stop. Actually, it went from 1357 down to 1352, but now it's come back. But anyway, I like the move. This breakout, if it happens, is going to be huge. Actually, the other thing, while you have your gold chart, you have also DXY there, which you had overlaid.
I do.
It's another thing I talked about in the chat room with one of our friends, and he was asking, what do you think is the relationship between the dollar and gold? And I said, look, in the short term, the dollar, real rates, stuff like that will affect the gold. But in the long term, I think number one market mover for gold is the change. I've said this many times: the change in money and credit supply. End of story. As long as there's big deficits, governments issue more and more debt, gold and silver will go up. End of story. And if you can compare, I posted these two charts in the chat room just now. Actually, if you compare the DXY and the gold, just like you did in the short term, in like a year time frame that you had, it's it's really well correlated. But if you go out to say a decade, no matter what the DXY does, gold just keeps going up. And that's I actually posted those two charts in the chat room just now.
Awesome.
And it just corroborates what I think is the case.
I guess it's very nicely correlated though with the chart of the real value of dollars. Inversely, of course. I mean.
Yes. But anyway,
Yeah, and and so I think that again, I will reiterate, if gold does break out today, you just have to be really careful with the dollar near term. So, well, guys, and good morning, Steve.
Good morning,
I'm going to pass it over to you guys. I got to get ready for the retail sales, but I hope everybody here has a wonderful rest of your week. Remember, if you're not part of ForexAnalytix, to be involved, you can visit our sponsors, which are Forest Park FX, and you can join the reimbursement program, which with your trading, you can end up becoming a ForexAnalytix member, possibly even for free. You can have your commissions help subsidize the cost of ForexAnalytix. So make sure you contact them. It's our reimbursement program on ForexAnalytix and Forest Park FX. Great people to work with. Make sure you can contact them right here on their email or Skype. So, all right, guys, it's all yours. Have a great one, and I will talk to you all on Monday.
Thank you, Blake.
Okay, Blake. Good hunting today.
Thanks,
have a great
guys.
weekend, man.
You too.
Okay, Steve, we have a couple of minutes, so I can mention one or two things, and then we can look at the numbers.
Can you switch to Stelio?
Let me see. Yes, I can, and it's nice and live. Okay. So let's start with the usual Brexit and UK.
We
had actually a very interesting statement by Boris Johnson, who is the overwhelming favorite to win and to become the next prime minister. He did say, and I quote, he said, "I am not aiming for a no-deal Brexit. I do not want a no deal as an outcome." He also said, "I do not want to leave with a WTO solution. It is perfectly realistic to get a deal done by October 31st. So either he knows something, or he has a very good strategy, or he's insane, because the Europeans have shown over and over again that they will not budge. So that was quite interesting. Again,
are you sure it's Boris and not Magic Johnson?
Yeah,
because he'll need some magic for that, right?
I wish it was Magic Johnson, or Dr. J, or those guys. So maybe he knows something, or he has some kind of plan. But whatever it is, he seems to be talking the same talk that.
Or he's suffering from wishful thinking, which we've seen plenty of times happen in this case.
Yeah,
who knows?
Maybe.
I guess it's not going to take long for us to find out.
Yes. What else did we have? We had Swedish CPI this morning. It beats expectation, 2.2% versus 2% expected. We don't have Sweden as an instrument of ForexAnalytix, but it does affect the kroner. It does affect a few. It's definitely something to watch. So that was a beat. And now let's have a look at retail sales, which is coming up in about 5 seconds.
Steve, your screen, I could be Mr. Magoo and see it.
So
Okay,
let's see if it comes up.
Let's see what we get.
Than expected, as Blake said. 0.1 worse.
A little bit weaker than expected.
Actually, core retail sales is in line. Yeah, marginally weaker. I don't think it's going to be any different.
Yeah, I knew I should have gone out and bought some more underwear. Yeah, a better number.
Yeah, true. So okay,
look at the euros selling off on that. New low here.
Okay, so far we're seeing. You can see the Euro USD here, cable as well pushing lower.
Dollar liked it.
Gold is pulling back at the same time. It is, but only marginally.
The revisions were good, but the headline number was, core retail sales was in line. Retail sales was slightly worse. So the revisions are better though. But the market seems to like it so far. Okay, so while that's happening, what else is there to say? Okay, we have the other thing we have is a big elephant in the room with Iran and what's happening in Oman, off the Gulf of Oman, and it's interesting because the U.S. Donald Trump straight away has come out and accused Iran basically of doing what happened yesterday, and Iran have come out and they said no, they categorically denied. So it seems that there is some kind of attempt, or at least I read this way, of destabilization there. And we have to remember the U.S. and Saudi Arabia obviously for decades have been allies, strong allies because of oil. Very, very strong allies. And who is the nemesis of the Saudis? Well, it's Iran. So it's we can't know what the rationale and the reasoning is behind, but there seems to be an attempt to maybe destabilize things or escalate the situation. I don't know what the end of it's going to be, but I can tell you this: we are in a situation where globally the economic environment is worsening. We have stocks near all-time highs. We have all the how should I say it? All the components are in place for a correction in equities, for a downturn, and this is not something that we need right now, right? So this might precipitate things if there is an escalation. So definitely worth keeping an eye on in case somebody's long risk, long equities. This could be quite damaging. So. So that's I think that's about it from what's happened overnight.
Sign up, everyone. You'll get to meet me.
That's true, actually.
That is very true, actually. There's no chance you won't get to meet Simon, being in the chat room.
Yeah. So that's about it. Steve, I think you can take over and I'll keep an eye on your screen in case it freezes.
Stelios, do you know why the fuel prices are kept so high considering the oil has dropped almost $20? Thanks. The answer to that for the vast majority is because the biggest part of the fuel price you pay is
taxes, yeah.
Is per liter most of the time. So, for example, in Greece, we have at least a couple of taxes that go on the liter and not even on the basic price. So that is one of the main reasons you see that. I don't know in which country you are, but I can tell you as a fact that in the vast majority of the cases, that's a problem, and that is why crude seems to be the pump prices seem to be so unfazed, in comparison to how volatile crude might seem. Just to give you an example, in Greece, which is probably
Steve, we lost you.
Really? You did?
Okay, carry on.
No,
you said in Greece, which is probably, and then we lost you.
Greece, which is probably, an extreme example of overtaxation. When crude was trading at 25, prices had gone down to something like, what was it, Stelio? 1.3, 1.4 euros per liter.
Yeah, and it's now 1.6. So basically, the price moved 70% lower, and the price of the gasoline in the pumps moved 10% lower to 15.
Yeah,
so
exactly.
It's and also you have to remember that the pumps are very, very fast to raise prices when oil goes up, but they're very slow to drop them when it goes down. But anyway,
exactly. Okay, cool. So let's examine what's happening here with price action. Let me begin by pointing a couple of things. Besides the fact that we obviously have dollar strength coming in the market once again, I think it's worth. I know that Blake briefly went over it, but let me remind you that I kept looking lower for Aussie as long as we were holding this confluence of resistances, and the fact that we got rejected from there is definitely not a good sign. So as you see, Aussie is very, very close to previous lows, which makes me think that there is absolutely no reason to believe that it can't even push lower towards this spike low at 67.45, right? Simply because the first area of resistance we found was more than enough to reject price. And, that is something to monitor. The same thing applies to the Kiwi. You can see here, it never made it to 67.10. 67.10 was the level I was looking for. But, 10 pips here, 15 pips there, as coach wants to and likes to say, good enough for government work. Now, having to do with the Kiwi yen especially, I wanted to show that, and I'm going to go to the USD yen afterwards. As you see, Kiwi yen is currently testing the previous low, also got rejected from the first confluence of resistance we found. Also worth noticing here that we never made it to fully retrace this descending wedge. So, quite a weak sign here, testing the lows, and, I have no reason to believe that they're going to hold 69.40, the spike low, is the next support zone. And here is the Aussie yen. Aussie yen is already at new lows. Yesterday, even since yesterday, was at new lows. Now approaching the 61.8% feed from the spike low to the 80, 60, 80, 70 high. 61.8 comes at 74.45. Next area of support below that, 72.75. Needless to say, there's nothing looking bullish with any of these pairs at the moment, right? I don't know what's going to happen in the future. One thing I can tell you for sure, there's nothing indicating an imminent reversal higher here. So, until something like that happens, you need to keep respecting, what the chart tells us. And what the chart tells us is that, we maintain, bearish type of trading. And here is the USD yen as well. As you see, the USD yen has now spent 24689 day to day. So in essence, 2 weeks. Today we're going to complete 2 weeks that it has been, let's call it, recovering from the lows. This type of recovery within like 10 days has just brought the pair something like 50 to 60 pips higher as we speak. So there is, you don't need to be an expert. You don't need to be like super experienced to see that this type of price action so far does not indicate some kind of a bullish recovery. Okay. Now, you never know what happens afterwards, but, statistically speaking, I would expect that, there is a very decent chance that this is going to be resolved to the downside once again. And that is going to be super important from a technical perspective, because I remind you that at the same time, we've been toying around with this multi-year symmetrical triangles, trend line support. And that is something to take very seriously, because, from a technical perspective, that's going to be like a major breakdown. The exact same deal with what we've been seeing here in gold. We've been toying. Today is the first day we're actually testing it. Let me take off this so you can see it. Today is the first day we've been testing this trend line resistance since April 2018. So since like 15 months ago, this is a multi-year triangles trend line resistance. A break above 1360 is going to be And I'm not going to spend any more time in this because Blake focused on this. But my position on that anyhow. If you've been even sporadically on the webinar, so what happens from here for gold is going to be very important to determine what's going to happen for the following weeks, perhaps even months. Okay, so you like gold lower, this is the place you want to be selling it. As simple as that. But once we end up breaking higher, if that happens, you don't want to be on the wrong side of the market because you can start seeing some crazy moves intraday. Like I wouldn't be surprised to see gold up like $20 within a day. Once that happens, easily. At the same time, silver about to test this horizontal resistance area. Obviously, there's no question about it. You can clearly see it. Silver is, far away from producing like a major technical event, oppositely from gold. So until proven otherwise, I think that, you want to go with gold if you're looking higher. Until proven otherwise, as I said. Okay. Now, there is also this gold-silver ratio currently testing multi-year resistance as well, and this ascending wedges resistance. So somebody can say, okay, we might see a nice reversal from here. Yeah, we absolutely might. But until you do see something like that, there is absolutely no reason why you should just dismiss this, this bullish trend just because we're testing a trend line. I mean, we can just bridge through it and keep moving higher. In general, admittedly though, when metals do well, silver, tends to overperform. So that would also indicate a likely reversal lower for the gold-silver ratio. But as I said, all that is in theory. Until we see a technical reversal, we should stick with gold. Once we see a big technical reversal in the gold-silver ratio, and especially if metals keep overperforming, then we can start looking for silver being the most appealing of the two to move higher. By the way, I've now been stopped out on the last third of my palladium short position for a profit. Of course, I wouldn't be risking my profits. That was a nice trade. Too bad I never managed to close that last 1/3 at $12.65 for $1. But it is what it is. As you see, palladium has been recovering quite nicely. And perhaps that was the end of the correction. I mean, we were looking for this zone anyhow. In essence, we did tag this zone. I was just a little bit too greedy, as it seems, with the stop loss for my last third. But it is what it is. So palladium looks quite constructive as well here. Copper, on the other hand, still consolidating here. So the chances that this is a reversal for every day that we're not going to be moving higher, it's going to keep diminishing, and what we will have left behind is probably going to be some type of bearish consolidation, and we should then see one more push lower to make it to this 257 zone that I was looking for anyhow. But there is still a chance that you can even see it on the daily. There is like some ugly possibility for an inverted head and shoulders formation. I think we need to give it a little bit more time. And of course, the fate of copper is also going to be, influence affected by what happens in risk assets. Okay. Simply put, so far in the S&P, we've seen nothing more than, if you see it on the daily, it clarifies things, than a horizontal consolidation. I was lucky enough, I faded with a pattern in play. ForexAnalytix subscribers do know that. I faded this breakdown from this wedge. And they had a target of 2870. I got lucky enough and got triggered. That was barely triggered, actually, intraday. So, that was a nice trade that yielded like 1.2% profit within like a day. But, the thesis that could produce something bigger hasn't played out yet. And, this type of consolidation that I see here looks more like a bullish consolidation. I mean, even if we push lower from here to form some kind of an ABC, that might prove to be like a bull flag, or if we keep coiling, that might just be a triangle. So am I bearish from current levels, S&P? No, I'm not. I'm not saying it can't move lower, but I'm saying that, the price action doesn't indicate something like that at the moment. Now, let's go back to the daily so we can have a look at the DAX. There it is. DAX, as you see, also consolidating below this broken ascending channels support, acting as resistance, but on the other hand, above these corrective channels, move lower. So I would have to say that, if I had to choose if DAX is currently constructive or not, I would say, yeah, it still looks constructive. So it still looks like it has a decent chance of continuing higher. The same deal applies for the FTSE. You can see that you can, view this recovery as like a pennant. We're still trading above it despite having pulled back somewhat this week. Still nothing that really breaks the trend or is a game changer here. Okay, now let me go over the questions. What about the S&P on the daily? Okay, we answered that. Told you euro would drop, says Mike. Yep, the euro is dropping, and coach very correctly said yesterday that the fact that we haven't seen some follow through in what could possibly be a dollar breakdown is definitely quite worrying. And speaking of that, let's have a look at the bonds, the main benchmark bonds, but before even that, the DXY, because if you remember, I was quite clear that there was still one hurdle that the DXY had to clear, which it didn't. And that was the confluence of this ascending channel. You can see it here in blue, this ascending channel's support, and the 200 daily moving average. So, that hasn't happened. We actually found support there, and we are rebounding higher. Okay, does this mean that the move lower in the dollar is over and we're bullish once again? I would be a little bit skeptical here. Let me show you what I'm looking at the moment. I'm on my Mac today, so my ability to draw fast, etc., is not that good because we had that Zoom problem and we want to see. So I'm looking at this trend line that you see here, like this horizontal support resistance trend line. So I would be a little bit careful here, exactly at this area, exactly at this level. Bulls don't want to see rejection from this. Also keep in mind that, just a little bit higher, we find, let me zoom out, you see this ascending purple trend line. It was the one that was defining the uptrend, since the beginning of 2018 until very, very recently. We broke down below it a couple of weeks ago, and, we still remain below it. Okay, so as long as we stay below there, I would still not at all rule out the possibility of more dollar weakness. Okay, I'm not like out there selling the dollar against everything. Not in any case. In fact, the only exposure that I currently have is being short and like 3 pips in the money at the moment, this USD CAD. I have to tell you that I might even close it today. The fact that we haven't moved lower yet, and it's holding up quite well, it's not what I want to see. I sold it because we're retesting this channel, this ascending channel's previous support as resistance. But unless we start moving lower today, I might even close it because I wanted to see a faster reaction. So I'm not short dollars yet. I will be if we break below the previous support that we found in the DXY. Coach, is that something you want to ask?
Oh yeah, Norm, on these new and full moons, he's has to leave early, so he wanted to know if he could start early.
Absolutely. Let me cover. I think we have a question. Let me go over. I think we have a question for crude. I want to do that because our friend asked quite a long time.
Yeah, that's
ago.
fine.
If there is no other question to look at, let me open the question and have a Q&A. Let me see if there is something else. Is gold just pricing in Fed rate cut next week? Gold is definitely pricing in a change in monetary policy. There's no question about it. Okay, and yes, that is what has kept gold moving higher. Okay, now about crude, nothing has changed since we visited that yesterday. It's likely that you weren't. I have no problem repeating yesterday's analysis, and it is the following. As you see, we found support, horizontal support resistance area roughly at 50.40, but we keep bouncing. We keep getting rejected also from this previous support resistance area at 54.70. Okay, so bottom line, there are two possibilities here for crude. One, it's just consolidating before moving higher, and since we've had quite a nice move lower, you have to that possibility as the main case scenario. Okay. But on the other hand, if we do break above 54.75, it is very likely that we're going to see a $3 extension and move towards 57.70, which is the next horizontal support resistance area. Okay. If I wanted to summarize, though, if there is a trading opportunity here, in my opinion, absolutely not, because we're more or less in the middle of these two areas, this horizontal support and horizontal resistance area. So in my opinion, there's no risk reward to do anything with crude at the moment. Okay. Okay, coach, you can go ahead and take the screen and have no start. Okay.
All right. Thank you, Steve. Nice review. Thank you, team. Great week serving the FX and trading community. Another week in the books, and Norm's going to wrap it up. I'm promoting you to panelist, Norm. So let me unmute you. And we should hear you.
You are unmuted by a host.
You're unmuted. So now you
I stopped sharing, coach, so he can start sharing whenever he wants.
Yeah, so you just move your mouse down near, I think it'll probably be near the bottom, and you'll see something that says share, and you click it.
All right, start video, participants,
share.
QBA, share. It's like a little
share, yeah.
Right there.
Okay, and then click there. Okay.
Got it.
And let me,
coach, we have a friend asking about the Kiwi yen. I did cover the Kiwi yen, so go ahead and check the video once we post it. Thank you, everybody. Have a nice weekend. Thank you, coach.
Okay, bye-bye, you too, buddy. Thank you. All right, go ahead, Norm.
Okay, can you see my notes?
Can see your notes, can see the top of the S&P chart.
Okay, I'm Norm Witzke. We're going to introduce me, Dale?
You are such a regular that your reputation precedes you, but for people that do not know Norm, he does a lot of work with the planets. One of the masters of some of the work of the masters, and you could learn from him. He does teach, and he's going to go over a little history here of what he said, and then a little bit of the future of what might happen. So used to be a trader on the floor, used to bet on horses, and now the horse that he's betting on is himself.
Okay. I have over 50 years of market experience. I started studying the markets.
And he's old.
Yeah. I started studying the markets when I was 15. I'm 68 now.
Okay.
So I'm an old dinosaur like Dale. Thanks for having me on your show, Dale.
I'm a T-Rex. You're a Brontosaurus. Go ahead, buddy.
Alrighty. So anyway, I just thought I'd go back to the end of May there, show you some interesting stuff and see how it worked out. And then by studying past patterns, we may be able to make some money in the future. The past is prelude to the future. And also I like to show you things, to show you, teach you things that, study these patterns, so that rather than just giving you a fish like the Chinese proverb, hopefully I'm going to teach you how to fish, teach you some things that you can use to possibly help you make some money in the future.
Stop baiting us.
Well, there you go. That's the end of my line there, Dale.
Oh, okay.
Okay.
I'm hooked now.
Okay. All right. Another Polish joke, right? Okay.
Hooked? No.
All right. There we go. We got 4 events that occurred toward the end of May, early June. That's what we're going to be looking at. We had there's something called a natal chart. We take a snapshot of the planets for beginning of some event, like when you were born or when a country begins. And I study the natal chart for the U.S. July the 4th, 1776, and when the planets line up, that can create a important change in trend point in the markets. So we had Jupiter 180 degrees. So where Mars was on July the 4th, 1776, we'll be watching for a major change in trend for stocks, T-bonds, and dollar. We also had, this is 20, May 29 AC means really the 30th. It's something that happened overnight after the close of the 29th. Same thing here. And we had Saturn lining up with Pluto and Capricorn. So we'll be watching cocoa, coffee, hogs, stocks, and T-bonds. And then we'll be the early wee hours of Monday, June 3rd. That was over the May 31 weekend. We had a new moon in Gemini, and that's always good for your financial grains and precious metals. And then on the morning of the 4th, that was a Tuesday, from the point of view of the sun, that's heliocentric. Mars entered the sign Leo. We'll be looking at Leo has to do with corn, gold, and OJ. So then now let's go look at the charts. Here's the S&P. We had the 30th basically for those 2 points for the stock market. And we had a little bounce top there, as you see on the chart, with the green arrows, and that worked out nicely. Green arrows mean you had a chance to make some money. If it's a red arrow, it didn't. It was not effective. So you had the 2 green arrows there. Then we went down to the low on the 3rd, Monday the 3rd, and that was an amazing reversal we had there. The market was going down, 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 and it reversed on Monday the 3rd with the new moon. And then you know what's happened. And we had a huge rally here since into about the 10th, 11th of June, and there we go. Here's your T-bonds. Nailed the, let's see, they had kind of a mixed picture here on the our 30th date. So I put both a red and a green one there, sort of half and half, kind of small, small amount of effectiveness there. But it did give you a small chance to make some money. But on the new moon, it nailed a beautiful top there for a short-term top. Here's your dollar coming up. I know everybody in your room here, Dale, likes to follow the currencies. There you go. There's one day. We're one day off the new moon there on the dollar. I think 1 or 2 did. No, I take that back. Let's see. No, that's our 30th date. That's the 30th date. New moon is over here, and the dollar ignored the new moon pretty much. It came down and then went lower. So we went 50-50 on those 2 dates for the dollar. Here's your cocoa. That cocoa worked for the 30th. We were one day off the top there on the 29th and still within range. So if you sold it there, you would not given up very much. And then the cocoa that dropped, that's about, I think, a $1,300 drop there on your cocoa. Here's your
When
coffee.
would be your next turn date for bonds? Because I'm looking for another high. Do you have a turn date coming up?
Oh, we're going to get to that. We got the full moon coming up early Monday morning, right?
Okay.
Yeah, but we'll get to that. We'll get to the future in just a few minutes. So here's the coffee, not effective. You got your red arrow there. And now we're going to go ahead to take a look at hogs. There's a nice little topping area there, 28, 29, 30. Made a little top there, and then down we went. And then looks like the hogs are still looking for a trough there, Dale. A little hog humor there, Dale. Okay, here's your euro. The currencies look like they were about 1 day off on the moon. They made their low like a day. There's a 30th, there's a 31st, and then they took the euro took off there on the new moon day. And there's your British pound. It was right there's a day late, but you're within range of the low day there, and mostly within range of the day for the British pound. There's June, the first day of trading day of June was Monday the 3rd when they had the new moon. Here's your yen. The yen is probably historically the best currency for following the moon. The yen loves the dance to the moon, and there it nailed that little short-term top there. Where one day I think it may have gone a few ticks higher the next day, and then that was it. Okay, here's your corn. Corn. We had 2 dates for corn. We had the new moon, and then we had Mars going into Leo. And you see there that we're close to the top on the new moon and nailed the top there the next day when Mars went into Leo. Uh, there we go. And then here's your oats. Nobody trades oats. 2 horses in Colorado trade oats, but we follow oats because if you trade grains, I was told a long time ago, I was trading mostly at the CBO, but also trade on the border trade. I was in the border trade building for many years and met a lot of grain traders. And somebody told me that the oats were a leading indicator, as you will soon see, because they often are ahead of the other grains. I don't know why.
Mares eat oats and does eat oats.
And little lambs eat ivy.
Yeah, they don't eat oats.
I'm going to have to write that
I only
down.
included the 2 that.
Okay. Here you go. The oats nailed, had a nice top there right on the new moon. But look here's what's interesting about as a leading indicator. The oats made their low in early May. All the others were about a week later.
That's a pearl.
What's that?
That's a pearl.
Yeah.
For grain traders to, even if you don't trade oats, to pay attention to them because
exactly.
Yeah.
All right, here's your beans. They topped right. Well, they had either day of the new moon day was a high day there. You're just a few pennies off the high there on the new moon. And there you go. Here's your wheat. Wheat is just a few pennies and a day ahead of the high there for the wheat. And now we're going to talk about our Leo markets, which we already looked at corn, but the other 2 are OJ, which is another thin market. Don't trade it. But it's every now and then if something extraordinary happens, you might want to take a look.
You ever trade the breakfast spread in the old days?
Now, what is the use? What did you use back for the old days?
OJ,
pork bellies, right?
Eggs and bellies, yeah.
There you go. But that's all really. No, pork bellies don't even exist anymore.
Well, they exist. They're just not a few.
What's that?
Country. They exist. The pigs still have bellies. They exist.
Well,
they just don't trade them.
They got rid of those crazy pork belly futures. Right?
Yeah.
Anyway, you see there, right on the 4th, that's when Mars went into Leo, and guess what? That was a high. That nailed it. Gold was 1 day later, and that made a little short-term top there. The fact we poked out over that top there, or right just above that, is kind of a longer-term bullish signal. Near term, though, because we have a full moon coming up Monday morning, we could be getting near a short-term top in the gold. All these, many of these markets that are at near the top of their range or channel, or if you're at the bottom of their channel, they all be subject to possible reversals here when we get to Monday. All right, here's what's coming up in the future, Dale. We have a big cluster of stuff happening this weekend, 14th after the close. That's this weekend. And we're going to be looking at the U.S. Let's see. No, take it back. This is Jupiter to the moon's north node. So we'll be looking at the oat silver stocks. And we have Jupiter to Neptune. And that's going to be your oil. There's a theme here now, I think, coming up. And then here's U.S. That's going to be stocks, T-bonds, U.S. dollar.
Okay.
We have another thing coming here. Oh, there you go. There's Neptune and Pisces with the moon's north node. There's another oil thing. And the stocks to respond to all this stuff. The stocks is a big basket of everything.
6/14 is today.
Yeah, and this is after today's close over the weekend.
Okay.
All these things are happening this weekend. it's a huge weekend for the planets.
Yeah.
Then the planets are going to kind of, with the kind of
take the weekend off.
Take the week off after Monday. There's not a lot going on until you get to the 20th, and that's one of my top things, right at the top of my totem pole.
Is it because it's near the equinox?
No, I'm going to tell you now, because
I mean the solstice.
What's that again?
The summer solstice.
No, I'm going to talk about Neptune turning retrograde, and anytime the planets turn direct or retrograde, that's due a shift relative to the Earth's motion. Then you get a change in trend with whatever market is associated with that planet, and particularly the so-called outer planets, those are the big long-term ones, Jupiter on out. Those are even more powerful. And we've got Neptune, they're going to turn retrograde, and that's the main thing there is oil. Okay. So I don't know, oops there. And then we have let's see, other than we have something big with the U.S. Around the 21st, which will be the summer solstice that you just mentioned. It lines up with 1 day of Neptune turning retrograde, and we're going to have some big news possibly with the U.S. there, particularly with the maybe President Trump might make a big announcement around then, and that might affect U.S. oil. And then you have the moon's north node in silver lined up with Saturn and Capricorn. We're going to look at the coffee, silver stocks. And then after the close of the 21st, that'll be over weekend. My other top thing is Mercury when the planets get to 0 latitude. And then you want to look at your grains. And again, it's stocks. That's going to be, and again, Mercury at 0 latitude right there I take it back. The 26th after the close is Mercury at 0 south latitude. That's your greens. This is also important. The green point here at the 21st, right on the solstice. All right. Well, that's your future points. Write them down or get a hold of me, and we can go over them. Or perhaps I could send you a copy. Here's the only charts we did not cover. Here's your silver. That's been going up with the gold, and it's getting close to the top of this resistance level here. So silver, the silvery moon, the silver might be turning on Monday. Here's your oil. We're not going to really be looking at the major point coming in oil is when Neptune turns retrograde. That's going to be the top one of the month, possibly of the month, around the 20th, 21st. And right now it's kind of had a little bounce and kind of in the middle of that little trading range there. So
you have any war cycles coming up with what's happening in the Middle East right here?
I have to go back and look. That'd be a U.S. thing. And we have, I think we had something. Let's see, you had to scan that. There we go. Yeah. This weekend.
Yeah.
It has to get
U.S. military you have.
There. Right.
Okay.
Something to deal with some kind of confrontation. There could be some confrontation.
Interesting. Okay.
Later on, we might come out okay on that when we get around the 21st. We have some really positive cycles in about a week from now.
Okay.
So that might get resolved.
Good stuff.
What's that?
Good stuff, Norm.
What's what?
Good stuff.
Thank you. Okay, so there we go. Now we're getting to the end. We got the free stuff. If you contact me, you can get a class. I also have, I didn't talk about it, but I also have a day trading system with a day trading class that I do in about 30 minutes. I'll teach you we forecast the markets down to the minute, S&P, mostly S&P, S&P E-mini. By the way, if you're trading that, today's rollover day, you need to go to September if you're trading any U.S. stock index futures, So anyway, contact me. I have, like I said, over 50 years of experience, 12 years of Chicago floor trader. So I have a little bit of experience, and I'll show you some more of this. And you can get my deluxe class. You can get basically a trader's education, college education in about 5 to 6 hours. So teach again, Astro, advanced Fibonacci, fractals, all the advanced technical analysis you can imagine. And I keep things real simple. Nothing I'm doing, everything I'm doing looks complicated. But after you scratch under the surface, you'll find nothing I do is beyond a fifth grader. You don't have to be smarter than a fifth grader to do any of this. If we had to do that, then I couldn't do it. I'm not that smart.
So if you
All
have
right.
a an interest in the fact that, perhaps, which people have for thousands of years, believe that the planets have an influence on human behavior, financial markets behavior, to take a free class with a guy like Norm is really a privilege. So thank you very much, Norm. Have a great weekend, my trading warrior brother. And I'm sure I'll be hearing from you shortly.
Great. Well, thank you very much for having me on your show, there, Dale. And want to wish everybody a good trading day and a great weekend.
Okay,
and
Norm.
Please call me right away.
Okay, Norm. And that's a wrap for us here in Face, everyone. Remember, don't just count your pips, count your blessings. You could take a screenshot of Norm here and how you could contact him. You're very welcome, Rose. You may want to get a hold of Norm and learn about these retrogrades. I'm going to be paying attention to these dates. They're not triggers to me, but they make me aware of what could happen. So everyone have a great weekend. And I'm just going to end the meeting here. Don't just count your pips, count your blessings. And we'll see you all on Monday. Adios. Thanks again, Norm.
Thank you.